gentlemen, good day and welcome to the Birla Corp Q3 FY2024 results conference call hosted by HDFC Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajesh Kumar Ravi. Thank you, and over to you, sir.
Yeah, thank you, Sagar. On behalf of HDFC Securities, I welcome you all to the conference call with the management of Birla Corp to discuss the financial results for the quarter and 9 months ended December 2023. From the management team, we are hosting Mr. Sandeep Ghosh, MD and CEO, and Mr. Aditya Sarogi, CFO. I now hand over the call to the management for their opening commentary, which will be followed by Q&A. Over to you, sir.
Very good afternoon, and thank you so much for joining. This is indeed heartening to see so many of you on the line. I think now we have more than 70 people, and we really appreciate taking out the time for us. This is Sandeep Ghosh, Managing Director and CEO of Birla Corporation. I have with me Mr. Aditya Sarogi, our CFO, also Mr. Arun Agarwal, who is our CFO for Reliance RCCPL. I have Mr. Rajat Prushti, who is our CMO, Chief Manufacturing Officer and Projects Head. And I have Mr. Kalidas Pramanik, who is our Chief Marketing Officer. This is actually the third conference call we are doing. We started doing it from Q1 this year. And in these 9 months or 3 quarters, I think we have come a long way, both in terms of our conversations with the investor and analyst community, as well as what's been happening inside the company. There has been a lot of change, and we appreciate a lot of you analyzing, and recognizing some of those progress which has happened, and as is reflected in many of the reports you circulate. And I would like to again record my thanks in that regard. We'll keep this conference from our side pretty focused and specific. I will make a few initial comments and then hand it over to my colleagues to add especially the financial and the elements of cost and other things which will be discussed, and also the marketing part which will be discussed by the respective colleagues. We as a company, we issue a fairly detailed press release in which we cover most of the aspects that are usually, people talk about in the conference calls post result. We cover most of it in our the press release itself. So I would not like to, you would have all seen the press release, so I would not like to, cover those points again in the interest of time. And though we can take up any questions you have on those at the end of our initial interventions. I would like to emphasize essentially on 2 things. First, all of you have been, a major point of interest has been the progress of our Mukutban project. And I hope you have noticed the steady progress which we made in the 3 quarters since I said we started talking to all of you. And you would also, I suppose, appreciate that we have not, predicted something ahead of expectation. Whatever we have indicated to you, it has been either met or exceeded. Like we had told you, we will exit the year at 2 lakh tons, whereas we have touched 2 lakh tons in January end itself. We have reported positive EBITDA all 3 months of Q3, which again is, I think, not many people had expected. So when we started the year, I had told many of you that there was probably some, communication gap either from our side or the understanding from the other side to think that the Mukutban was running behind schedule and it was going to be a drag on the company. And I had clearly mentioned that no, we are moving as per a plan and a particular trajectory, and we are, we clearly understand what are the challenges and how we are going to mitigate them, and you see that reflected, translated in the results. Essentially, we were driving on two levers. One was cost, and today we can say with great deal of pride that we are one of the most efficient and lowest cost producers of cement, not only in that region, perhaps in the industry itself. Equally, we were ramping up production, and I think there was, again, some misperception or miscommunication in terms of what is the ramping up and how we will do it. And there we had given you a clear understanding, and we had also clarified, I think, the understanding before that Mukutban was meant to supply entirely into Maharashtra, which was never really the plan and intention. Mukutban has to supply to its natural markets around Mukutban, as a result of which today we have reached 60% capacity utilization, which a lot of people had doubted that we will reach at this point in time. And what I'm calling the natural adjacent market, that was very much part of our plan. So as a result of that, today I am selling, my presence in Gujarat has increased substantially. Today I'm selling more than 1 lakh tons in Gujarat to become a significant player in Gujarat, and a large part of that quantity is actually coming from Mukutban servicing south of Gujarat, where there is a huge growth happening because of the activities of things like bullet train, the corridor. There is surrounding that, there is a lot of economic and construction activity, and we are today in a position to take advantage of that. Similarly, southern Madhya Pradesh, which was not particularly economical for us, not the most profitable for us to tackle from Maihar, we are able to do that and release the Maihar clinker for the more profitable markets in our core areas where we needed additional clinker, additional volumes to be able to ring fence ourselves from the newer capacities which were coming up there. That is the concern people had, that how are we going to retain our market shares in those parts in view of the newer capacities coming in. These were very much part of our plan. As a result, we don't get into the specific details, but in those markets which are key for us, Eastern UP, Madhya Pradesh, we have not only retained our market share, but we have actually enhanced our premium in those markets and secured our position. And talking of premiums, this is something which I have said in the past. It's probably not as well appreciated. This is a company, while everybody else is now talking of increasing their premium share and they consider taking it to 10 or 12% premium share, we have been above 50% for a long time. But the significance of that is not just 50% of premium. The significance of that is we have almost an equal presence in both the premium category as well as in the popular category or value category, as we say. Very few companies, or I don't know of any company who can say that kind of a portfolio distribution between the premium brands and the value brands, which gives us a very, very unique position in the markets where we are present. Secondly, another point I have emphasized, our, part of the strategy has been to tackle our go-to-market supply chain in the most cost-effective and optimal manner. And by go-to-market supply chain, I mean, that's the examples I gave you, that whether I have to supply Gujarat from Mukutban or South Madhya Pradesh from Mukutban, these are very much part of our strategy. And so when our plants have been created, we kind of encircle our core markets from all on a 360-degree basis, with Mukutban there taking care of the south reach. We're going up there from Maihar, Satna, and then to Kundanganj, which takes care of the core, and Raebareli, which takes care of the that core area, and then from Chanderia, we are able to service the north as well as western MP. So this is what is part of our, again, a very clear go-to-market strategy. And when we are operating in the popular segment, there too, we follow a segmented approach, wherein we have got a whole bouquet of brands which we can put position them at various price points. So we have a Samrat, but we have a Samrat Advance in LPP bag in the same markets in the value segment, which is sold at a premium, but we are able to tackle the popular brands with a Samrat or a Chetak. So these are very much part of our overall strategy with which we have been working, and that's how we would like to go forward, and our future plans have been clearly indicated to all of you as to how we would like to first augment our grinding capacity and then move towards our first next expansion of the clinker line, which would be Maihar Line 2 in FY27. So that's broadly the picture which I would like to leave there. Last comment, two things is we have indicated in this, I think we are probably the first company to indicate that there is reason to exercise caution in terms of the growth happening in the first quarter of this calendar year. In this quarter, what we are seeing, January has not been a particularly good month for the industry. Even right now, we are not seeing any kind of sharp firming up of volumes, and all prices have slipped a little bit in the last week or so. So we are viewing this quarter in a cautious way from the marketing and pricing point of view. So therefore, we have only place where we are kind of revising our projection, as we had indicated, a 15% growth in volume. But right now, we are taking a call to say it will probably be in the region of 13%, and that's owing purely due to market conditions, not anything to do with our ability to service the market or our ability to compete out there. But we are sticking to our projection of 850 rupees per ton EBITDA for the year, and Mr. Sarogi will elaborate on that further. But I want to really make the categorical statement that is something which we are still confident of, and we are not revising our estimates there. With that, I'll leave it for Mr. Sarogi, Mr. Prushti, and Mr. Pramanik for initial comments, and thereafter we'll move straight into the question answer.
Thank you, sir. As Ms. Ghosh said, that we are maintaining our guidance of EBITDA per ton of around rupees 850. In this, we have factored in incentives coming in from Mukutban. So that EBITDA will be inclusive of this number. And I would now, Mr. Prasti, if you have any comments.
Yeah. Good afternoon to all, and thank you, Sarogi sir, MD sir. And as rightly said by sir, yes, we are working on the cost reduction initiatives in all fronts, starting from the variable and fixed cost, and we have optimized the fuel mix, and though the fuel cost reduction has helped a lot, and apart from that, we are optimizing the fuel mix also, kiln by kiln. That is also helping us further to reduce our delta. And as a result, you can see that our cost has reduced by 400 rupees plus compared to YOY basis, and around 8%, which shows that continuous efforts are on to reduce further the cost and to be the one of the best cost in terms of total variable and fixed cost delivered to market. Apart from that, there are some initiatives which already we have taken, which that is the Sikhar projects, which is mainly it is driven for the manufacturing excellence project, which is really helping us for taking the team together and working on very small initiatives, which really the team is working at the field, at the site for helping us. In this quarter also, we could able to achieve around 55 rupees saving per ton of cement. So continuously we are working on all these areas, including Mukudvan ramp-up volume and reducing the Mukudvan cost. So all these initiatives are helping us to improve our volume and reduce our cost. Thank you. Now I request Mr. Kali.
Good afternoon to all of you, and thank you, our MD, CEO, CFO, and Rajat, and our colleagues. If you look at the quarter 3, our growth already has been published over there, and our main focus was in Mukudvan, and all of you have seen that in the Mukudvan we are able to increase the volume. And the volume increase, it is mostly concentrated in the natural markets of the Mukudvan. If you look at the location of the Mukudvan, it is not only just entire Maharashtra. There are certain parts of the Maharashtra where we are not getting, particularly the South Maharashtra. But whereas the South MP is coming under this Mukudvan's purview, where we have improved our volume. Similarly, as our MD said, that like Gujarat, that Saurashtra, these are the parts, if I look at, where the realization is good and it comes from Mukudvan point of view as a natural market. So these are the markets where we have Gujarat specific to, if I talk about from Mukudvan, almost 10% sales there happen. And looking at the price realization, yes, we are almost at par with the industry price realization in the quarter 3. Particularly in our addressable markets, which are our factories natural market, these are the markets we are able to take our realization better. In quarter 4, if I look at the outlook, yes, in the month of January, if you look at industry per se, there was some dip, but February, we are expecting that it will pick it up from mid of February. And again, March focus would be there on primary, as well as since a lot of infra projects are there, and most focus would be on the infra and commercial side. But as we said, that our focus still remain on the individual house segment, though there is no much demand we are expecting in quarter 4. But overall, if we look at this will help us in terms of, particularly in the Maharashtra infra projects, it will help us to ramp up further the Mukudvan volume. And I am sure we are expecting a very good volume with respect to quarter 3 from Mukudvan. And realization, yes, realization, if I look at, there are pressure, but as manufacturing has have taken the project, similarly from the marketing side, we have our project Unnati. In the Unnati, basically our focus is on the cost reduction, how we can reduce our logistic cost. Second focus is on how we can increase further our premium products percentage out of our total kitty. Third focus will remain on that whichever is our high contribution zone markets, it is identified and we are focusing on those areas. And another focus will remain as the network optimization, as MD sir already explained, in terms of factory specific like Mukudvan. If I talk about which are the areas, which are the rake points we have to cater so that our logistic costs would be optimized. That is how these are the projects have been taken. Even if price doesn't go up in the market in absolute terms per bag, but these are the efficiencies. I believe it will help in terms of taking an incremental or marginal improvement in realizations. Thank you from Sales and Marketing.
We now request questions from the audience.
Just 1 minute. Rajat, you may like to add something on the, our alternative energy and the renewable energy and green initiative. What I like to point out is nowadays I find a fashionable term has become green cement. Everybody is manufacturing green cement, but the proportion of blend, which I understand as a layman as blended cement, and the proportion of blended cement in this company has been close to 85%.
Yes.
And we would like to stay that way if necessary. If as and when we can, we would like to take it up more than 85%. And what we are calling blended cement, probably we should be, in going forward, we should be calling it as green cement for better understanding, or popular understanding, because I don't think we get enough credit for what we have been doing for a long time. Thanks.
Yeah, as you know, we are at around 23 to 24%. Last quarter it was 23% on the WHRS and solar energy total consumption of that. And continuously we are working to improve the efficiency, both in terms of reducing the auxiliary consumptions on the CPP and WHRS, and this green energy contributes around 23.3% last quarter. And going forward, we are working on further augmenting our WHR capacities, plus the additional capacities in 3 plants on the solar, especially at Mukutban, then Kundanganj, and Mayyar. These 3 plants we are working again for increasing the capacity of the solar installations. So that will help us, in fact, by FY26 we should be able to reach to the level of 29 to 30%.
And I'd like to compliment both the commercial and the manufacturing teams of the very dynamic fuel mix optimization they have done, due to which our fuel cost levels, we have, I think, bettered the industry.
Yeah. Because for this quarter it was 1 rupee 58 paisa per 1000 kilocal, as compared to 1 rupee 75 paisa in the immediately preceding quarter. So there was a reduction of 10% sequentially.
This is noteworthy, and I think a lot of credit goes to my colleagues in manufacturing and the commercial colleagues who procure the fuel. Thank you. We would welcome questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir, and congratulations on better profitability. Sir, the first question is on the volume front. As you mentioned, you have already reduced the guidance from 15 to 13%. But then also in terms of the, if I look at the ask rate for the fourth quarter, it seems like a 12.3%. That is kind of a 5 million and kind of a number that we need to do for the fourth quarter. So are we confident to achieve that? And on the profitability front, though we are maintaining 850 rupees for the full year of FY24, that means for the fourth quarter we need 1100 rupees kind of a EBITDA per ton, versus the third quarter we have achieved 903. So are we confident, and how are we going to achieve that? So as you are mentioning, the prices have already reduced. So that kind of a cost saving is possible, 200 rupees kind of a QOQ improvement in the fourth quarter?
I'll first let Mr. Pramanik answer your question on the volumes, for the fourth quarter volumes, and then we'll take up the EBITDA point.
Yes, as far as the volume is concerned, if you look at so far we are 13%, and overall year we have talked about 13%. So in the quarter 4, the basic increase will come from our Mukutban side. If you look at our Mukutban volume in the quarter 3, and vis-a-vis if I look at quarter 4, the way we have projected, so there's a major growth will come from the Mukutban plant. And then I'm coming to our existing, the addressable market of our, which is already established markets. There also I'm expecting the growth would be around almost 8 to 9% we are expecting. If I can get this kind of volume, then definitely whatever the projection we have given, we will achieve that projection. And basically, when the market subdued, the major volume will from Mukutban, because already we have seeded the market, Maharashtra and the surroundings. So from those markets, our volume will come.
I want to add on Mukutban one point. Again, it may be of interest to all of you and to preempt any questions. 60% of Mukutban volume is from Maharashtra. 65%. And that's something which we had indicated all through. We are maintaining, and we have achieved that. and we had said 40% of premium volume of our trade volumes. Even that we are consistently maintaining, and we expect to improve upon it. And our premium volumes premium prices are at par with the market leaders, their mother brands. And in UP, MP, our core markets, we can proudly say that today our Perfect Plus sells at either at par or a rupee or two,
or more than
par or rupee or two higher than the mother brands of the leading A category players, as you would call them. I'd pass it on to Mrs. Sarogi to answer on the EBITDA.
See, we are mindful of the fact that we need to record higher EBITDA in the fourth quarter. We are also cognizant of the fact that there has been some pressure on the pricing front. So while giving this guidance, we have factored in some drop in prices to the extent of 3 to 4%. And still, our guidance is based on the fact that we will be recording higher volumes, which will yield higher contributions. Our various measures on the cost front is going to reduce the cost, which is also going to add to our EBITDA. Our Mukutban plant, the profitability continues to improve each quarter, so that is also going to yield higher profits. And fourthly, the point that I shared about the incentive of Mukutban coming in. So because of these factors, we feel that we should be able to achieve our guided EBITDA of around rupees 850 tons on an annual basis.
Okay, that's great, sir. If you can allow me, I can ask one more question.
We should not have follow on. I'm sure these questions will come from many people.
Okay. Thank you, sir.
And the EBITDA question, I hope, has been answered for everybody, because this question would have come up later. So please, let's not go back to that question.
Thank you. Mr. Shah, do you have any more questions?
No, sir has said that you will take the next question. Thank you.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi. Thanks for the opportunity. So, on the incentives, firstly, could you kind of spell out the incentives booked in Q3 from Kundanganj and Mukutban?
Mukutban, we have not started recognizing incentives. How much was Kundanganj? 33.
Okay, so it's still capitalizing is what I understand, which you had mentioned earlier.
Kundanganj is 33 crores for this quarter.
Sorry, how much?
33 crores.
33. And by when will Mukutban accrual to P&L start?
That's what we said. No, in this quarter we are expecting that accrual. From the fourth quarter, we will start recognizing the Mukutban incentive, and that is something to repeat, is factored into our EBITDA projections for the year.
Got it. And the Kundanganj incentive expires in this quarter, right? Has it already expired, or it expires in March?
It will expire in March.
Understood. And lastly, on the Maihar Line 2, you mentioned that you plan to commission in FY27. When will the work and the capex for the same start?
Next financial year.
Earlier, I remember you had said that there's a debt target you have in mind before you start work on it.
Sorry?
So, I remember in the earlier calls it was mentioned that there is a...
Debt target still remains. So as we have shared in the past, we have a clear policy of maintaining debt to EBITDA ratio at a maximum level of 3 on a sustainable basis. So on that basis, only we make a capital allocation. Okay. So on that basis only we are going to start this project of expansion next year, and we are confident that we will be able to maintain our debt within the matrices that we have considered as a policy.
Sure. Thank you. I'll come back in the queue.
Thank you. The next question is from the line of Aman Agarwal from Equirus Securities. Please go ahead.
Yes, sir. Thank you for the opportunity and many congratulations on good side again. So first wanted to understand on the lead distance for company as a whole and for the Mukutdan plant.
Lead distance, it is around 350 and Mukutdan is also, it is coming around 300 to 310.
Understood. Understood, sir. And second, on the RM cost side, we have again seen 6% or kind of 10% kind of a sequential improvement. If you can explain what has majorly factored into this, and how do we see the RM cost going forward?
What, sir?
Raw material cost, sir.
Raw material. Raw material cost is by and large benign, so we don't expect any major change in as far as the raw material is concerned. As far as fuel, I don't know if you mean fuel also within raw material. As far as fuel is concerned, as I shared, we have had a sequential drop of 10% in fuel prices compared to Q2. In Q4, we expect the price to be at levels of Q3, which is around 1.58.
Understood, sir. And lastly, on the UP expansion, which we are expecting by second quarter FY25, that guidance still sticks? Any progress on that? Any change?
I don't think we mentioned second quarter of 25. We have guided for that second quarter of 25. But it is in progress.
We said commencement of, not production, commencement of the project.
By the end of next financial year, around that time, we should be having that commission.
Understood, sir. Understood. Thanks, sir.
Thank you. The next question is from the line of Mangesh Padan from Centrum Broking. Please go ahead.
Good afternoon and thanks for the opportunity. Sir, so two questions. First is on the cost front. So very, basically very evident reduction in cost that you have reported. And just wanted to understand the steps taken by you under Project Shikhar and how much more cost saving and because of this initiative is possible going forward.
As rightly said, there are two things. One is the majority is the fuel cost.
Right.
And we have optimized the fuel cost and obviously the WHRA plus our CPP operations also because the fuel costs were lower. So we used to, you can see that key from 12% of the CPP operation to we had gone up to 60% of the CPP power contribution. So that shows that key whatever the opportunities were there for the cost reduction with respect to the fuel, we have already doing that and continue. It will continue further also in this quarter also. In the Shikhar projects, yes, we are working and continuously our team is working, identifying the ideas, small ideas, small savings. And this quarter also, we are sure that we will continue to maintain this 55 rupees.
And just to add to a point, in regard to fuel, our composition of imported fuel in third quarter of last year was 43%. In immediately preceding quarter, that is second quarter, it was 31%, and in this quarter, it is now down to 25%. So that is the kind of change in the fuel mix that we have been able to achieve, and that is also contributing to the reduction in fuel cost.
Great. Sir, and similarly on captive coal blocks, so we already have one captive coal mine, and we had got 3 under the auction. So just wanted to check on the timelines on when the Bikram coal block and the others would start, coming into the overall production.
Bikram coal block, we expect to start production in the second quarter of next financial year.
And that should add, let's say, 20% of total central capacity. It should basically take care of central region's 20% requirement.
Yes.
Okay, great, sir, great. Thank you. I'll come back in queue, sir.
Thank you. The next question is from the line of Tushar, who's an individual investor. Please go ahead.
Yeah, hi. Congratulations on a good set of numbers. Just need a few clarification on your statement first. Like you said, Bikram coal mines, you expect to be starting second quarter of next financial year.
That's right.
Okay. And one more clarification on Mukutban incentive. Like you said, they are coming in Q4. So are they in Q3 as well? Or?
No, in Q3 we have not recognized any incentives. We expect to start doing that in Q4.
Okay, in Q4 only. And so now my first question is, in last quarter you talked about improvement in NSR through geomics, and we saw improvement of 2% in Q3. So should we expect further improvement going forward?
We would not like to quantify that number, but yes, there will be an improvement on a continuous basis.
Okay. And so my last question is on the fuel cost. You said to be in line at the level of Q3.
Yes.
That raw material cost
is what we have achieved in Q3, and we expect the number to be in that range in Q4 as well.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Sanjay Nandi from VT Capital. Please go ahead.
Hello.
Yes, please go ahead.
Yeah, thank you, sir, for the opportunity. So can you just elaborate the project sticker which is going on and that we have made some cost savings of per term. So what is the future of that project? Like what kind of quantum of cost savings we can anticipate in coming 2 to 3 years down the line?
As we rightly said, this project was launched in last first quarter of this financial year, and continuously our teams are working in each and every plant. This is a bottom-up approach project, and it is the involvement of all the team members who are working at the site. It is for the plant and by the plant, by the people. And this concept of improving the manufacturing efficiencies and excellence in manufacturing, both in terms of improving the KPIs and reduction of the wastages. So all these things, there are small projects people are working, and continuously our aim is to reach to the level of 100 rupees in 2 years, which already we have seen a result of 55 rupees. So another 45 rupees is the target is there, for which we are working, but it will take time to really materialize because there are small projects and the savings are also small, and the capex are also very, very low capex or it's a nil capex projects.
Got it, sir. So that's it from my side, sir. I'll come back in with you. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Namaskar, sir, and thank you for this opportunity. Firstly, sir, as alluded in your press release, wherein you have articulated the fact that demand have remained subdued for January due to extreme winter and fog across the country. And so is this the only reason for which the sales have not picked up, and now with the weather getting cleared, we can see the ramp up or execution in the projects where we are supplying cement will pick up? How should one understand the situation?
You see that in the month of January, yes, there are some fog area, like mostly in the northern parts, and because of that, there are some drop in sales. But as far as in the industry per se, but if I look at from our side, we did not have much drop. Rather, we have maintained what we did last. And in the month of even January also, what the growth we have maintained, that is mostly from our Mukutban plant. As already it is mentioned in the already published that 2 lakh tons we have done more than 2 lakh tons from Mukutban. So that gives us the overall growth in our case. But yes, overall, if you look at industry per se, the demand, except top northern part, there was subdued demand.
Okay. And so when we mentioned 2 lakh tons per month mark, what was our quarterly number for Mukutban, and what are we penciling in for the fourth quarter in terms of the sales? And I think so, sir, there is some threshold after which the benefits will start accruing. So if you could give some color on that also.
So 2 lakhs was what we achieved. So the next quarter we'll do at least 6 lakh tons in terms of volume.
Okay. We had indicated 2 lakh tons on the exit of March. We have achieved it earlier. We expect, therefore, to maintain the same rate and come somewhere close to 6 lakh tons in the fourth quarter. That's what we can say right now. And in terms of there is no threshold, fourth quarter we will start recognizing the incentive. That's the plan.
Okay, and what would be the amount, sir? How much we will accrue?
We will not indicate the amount right now. That's not.
We can't
say that. That's not proper.
Okay, sir. And one more point on the transport and the forwarding expenses on the finished product. On a Q-on-Q basis, our volume has risen from 4.18 million ton to 4.2, wherein our transport cost has gone up from 453 crore to 488 crore on a Q-on-Q basis. Sir, what explains this increase, and whether this gets rationalized going ahead? Any one-off item in here?
That if you look at the total delivered cost, that has gone up because of the busy season surcharge, right? So whatever the increase happened, but that is not totally added. We have whatever the projects we have taken, small projects in logistics, like digitalization, we have as well as that automation process. That helped us in terms of reducing that TDC what it should be if I add the surcharges.
So we have not had the full impact, negative impact of the surcharge. The surcharge resistance surcharge would have affected everybody, and that's where, to answer your question, is the jump. But the jump is much lower than what it would have been had we not put in our cost savings or cost efficiencies in place. Thank you. Next person, please.
Yes, sir. Yes. Thank you, sir, and all the best to the team.
Thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, how much capex we have done for till 9 months and for full year, and for next year FY25, how much capex are we planning to do? And at the same time, what's the gross and net debt as on December?
So capex we have done till December 450 and by 415, and within March we'll do less than 700 crores. Our net debt as on 31st December was 3,470 crores, and we expect to end the year with a figure less than 3,400 crores.
Okay, got it. And sir, you mentioned this 1.4 MTPA grinding unit at Prayagraj to start by 4Q FY25 or 4Q FY26?
We expect to start that by the end of next financial year, which is FY25.
Okay, the production will start from 4Q FY25.
Yeah.
Okay. And the next expansion, so definitely the Mayer line 2, and then the further grinding units also in the coming years whenever we'll be announcing. But our plan is to reach a 30 MTPA by FY30. That will remain. But any intermediate guidance, if we have any after 3 years, how much capacity we?
No, by FY27. We expect to reach a capacity of 25 million tons.
These are very clearly stated in our press release as well.
This 25 was already mentioned in the opening remarks.
Okay. Got it, sir, and all the best.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, good afternoon, sir. Congrats for good results. Couple of clarifications. You said capex for FY24 as 415 plus 700 or total capex of 700 crores?
Total capex till December is 415. We expect to end the year with a figure less than 700.
Okay, so we were looking at 1,000 crore earlier in the year.
So we'll be spending less than what we have indicated earlier.
Sure, okay. And just on volume, so what, including the ramp up of the volume, so total Mukutband volume for the year was how much? Is like expected how much, and what is the expectation for next year?
I don't think we can give that detail, but as we have indicated, we expect to end this quarter. In Q4, we are expecting a volume of 6 lakh tons, and in Q3 it was 4.9 lakh tons. So there will be a sequential improvement of 22% in volume.
Thank you, sir. These are my questions.
Thank you. The next follow-up question is from the line of Mangesh Badan from Centrum Broking. Please go ahead.
Hi. Thank you, sir. Sir, my question was regarding the Chittorgarh line, stone mines. So we have got an approval now to do blasting. So just wanted to know the status there. Have we already started and stopped the mechanical mining there? Or in case if we do, what kind of cost saving would it entail for us?
See, your perception is not correct. What the court has, Honorable Supreme Court has do is they have asked 4-month study to be conducted by IIT ISM Dhanbad and to assess if at all the blasting has got any impact on the Chittorgarh fault. Once that study is completed, the report will be submitted to the Honorable Supreme Court, and based on the findings of the report of the study, the court is going to take a final call.
Okay, so during this period, you are only allowed to do blasting for that study purpose and not commercially?
Yes. Right.
Okay. So probably it's a prolonged matter, so there will be a report to be filed and, then it will go again to the NGT and then...
4 months time frame has been given, no? So in that sense, it's not such a long time frame.
Understood. And sir, just one more thing. You mentioned you are tapping southern Gujarat market from Mukutban, which is almost 800 kilometers away. So just wanted to understand, how the economics work in that respect. So is the realization much higher there, which can take care of the additional freight, or is it because of better connectivity, or just because we are getting some volumes there?
No, we're not doing it any incremental way. It is definitely profitable. The prices as well as our connectivity by rail makes it very, very lucrative for us to sell in Gujarat. It's a natural market according to us, South Gujarat, and in due course, the Bombay region. But the Bombay region has a different material requirement, and that we will take care in due course.
Okay, understood. Thank you.
Thank you. The next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Sir, congratulations on good set of number. So, was the Kundanganj incentive in similar range what it has been in Q3 for Q2 also?
Yes, around the same range.
Okay. And whether the fuel cost have reduced due to higher linkage and captive in this quarter, and what is the number for linkage and captive for Q3?
No, that's not the reason. The reason is the change in the fuel mix and the drop in the fuel prices, procurement at lower prices.
Okay, and what is the number, what is the percentage of linkage and captive?
Linkage and captive, I can't give a separate figure, but as I indicated, our component of imported fuel on a sequential basis has come down from 31% to 25%. So the domestic procurement of domestic coal is to the extent of 75% in this quarter, and domestic coal is the cheapest source of fuel in most of the regions, especially in the plants located in the central part of the country.
Okay, understood. Got it. And sir, on Mukutban incentive, you highlighted it will come from Q4, but from which month? Have you started accruing from Jan?
We will not try to get into that, but in Q4 you will find the approval.
Okay, so it would be more like a fag end of Q4, like maybe last 45 days.
So whether it's fag end or beginning, that is a matter of recognition and putting there. It doesn't change anything in terms of declaration or auditing.
No, the question is more on the side of, I'm talking more from Q4, the guidance of EBITDA per ton. So if Mukutban incentive also doesn't come in a major way, then the 4%, uptick in realization, won't it be a tall task in the market when the demand is muted?
We have talked about, as we said, we have factored it very clearly in. So when we are giving you a guidance of 850, obviously we are factoring in how much will come in and whether that will allow us to meet our guidance. You must, that's where you have to either trust or do your own independent view on the management guidance. We cannot be doubly getting our own guidance.
Yeah, understood. That is quite helpful. Thank you.
Thank you. The next question is from the line of Raghav Maheshwari from Asian Market Securities. Please go ahead.
Sir, can you please little bit elaborate about all the three captive coal mines, Bikram, Sialgogri and Brahmapuri, whenever the mining will start at all three, what is that 1,000 per kcal cost will come at from these all three mines?
Sialgogri is already in production.
Yeah, I know, sir, Sialgogri. Other than Bikram and Brahmapuri, what will be the estimated cost of the 1,000 per kcal?
Bikram will be around 1 rupee and Brahmapuri we are not pursuing currently. Mighty Birla is the one we are pursuing. So that will be around 1 rupee 25 paisa.
And for the Sialgogri, sir?
Sialgogri it is 1 rupee 45 paisa.
And sir, whenever will all the three mines will start, how much it will cater for all the clinker capacity, including Mukutban as well as Chanderiya? Is it
60% of the enhanced capacity after line 2 of Maia starts.
60% at a company level for a clinker, right?
Yeah, correct.
Including CPP.
Right.
Including CPP. And all the three mines have a kiln grade coal, or anyone have only CPP grade?
No. Mostly. Yeah, we will be able to use it in kiln as well as CPP.
Okay. Got it, sir. Okay, sir. Thank you.
Thank you. The next question is from the line of Uttam Kumar Shrimal from Axis Securities Limited. Please go ahead.
Yes, sir. Thanks for the opportunity and congratulations on a good set of numbers. Sir, what is our volume growth guidance for FY25?
We cannot give that. Maybe we'll be able to give that guidance in the next conference call.
You must leave some material for us to talk in the next conference call. As it is, you're finding us.
Okay, sir.
Shorter and shorter.
Okay, sir. And sir, what has been our borrowing cost this quarter? For borrowing cost this quarter?
7.98% in Q3.
Okay, sir. That's all from my side, and all the best.
Thank you. The next question is from the line of Vipul Kumar A. Shah from Sumangal Investment. Please go ahead.
Hi. Thanks for the opportunity, sir. So, my question is, you said by 27 we will be reaching 25 million tons. So 5 million tons, where we are adding and what type of capex we are incurring on that, and it will be only clinker or there will be grinding capacities as well? Thank you.
As our MD has indicated, it will be a mix of IU. The clinker capacity will come at Maia, doubling of capacity at Maia from 10,000 TPD to 20,000 TPD. And grinding will be split grinding unit that will be coming in the states of Bihar, couple in Uttar Pradesh, and maybe one in the west.
And what will be the capex for this 5 million tons?
That we are not able to share at this juncture. Once we get the board approval, which we intend to get in the beginning of next financial year, once we have that, then we will be able to share specific details.
Okay, thank you.
Thank you. The next question is from the line of Anupam Jain, who's an individual investor. Please go ahead.
Yes, hello, sir.
Yes, please.
Hello.
Yes, please.
Yeah, yes. What I wanted to understand is how is the regional demand going on? As you're expanding the capacity and you're saying there's a cautionary side, so how is the demand looking from 2 to 3 years perspective?
But the caution which we have given is only for this quarter. And 2 to 3 years projection, we will give it to you, as we said, leave something for the next conference call.
But you're just, as the election are coming up and you're saying this is much more in the marketplace, not majorly related to weather. Is there any phenomena that you're experiencing apart from that? That is my primary question.
We are giving you by the trend. We are giving you by the trend of what January has happened. And when people were expecting the quarter, there's obviously the past trends of January were factored in. We have seen that. We have seen softening of prices. That's what we can comment at the moment. We are not really, looking into elections or how elections will affect. That's a subsequent change. But right now, we have taken a full call, and Mr. Kalidas Pramanik has very clearly said our growth will come primarily from Mukutban, and where we are making steady progress. So we are, not banking. We are practically sold out in our other plants. So we are not really looking at volume increases, substantial volumes to come, additional volumes to come from there.
Okay. Thank you.
Thank you. Ladies and gentlemen, we would take that as our last question for today. I would now like to hand the conference over to the management for closing comments.
That was a great conversation. Thank you so much for your interest, continuing interest in the company. Thank you for your words of encouragement. We really appreciate that, and we continue to look forward to your support and your confidence and faith in us. Thank you.
Thank you.
Operator, you can now conclude the call.
On behalf of HDFC Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.